Hello and welcome to Policy Bazaar. I'm Arun Bhagat. Now, term insurance is perhaps the most important type of insurance that any individual needs to have in their portfolio. And yet, historically, it has never been very popular with the Indian consumer. Also called pure life insurance, term insurance plans are not very expensive to buy as they are not linked to any saving instruments. But they provide much needed financial support in the unfortunate event of the principal earning member's death. To understand term insurance and its importance, we have with us Yashish Dhaya, CEO and founder of Policy Bazaar. Welcome to the show, Yashish. Tell me, how popular is term insurance in the developed world as compared to India?
So if you look at the US, which is a large center for insurance, 30 to 40% of all life insurance premium goes to a single category called term insurance or pure life insurance. You wouldn't find pretty much any middle class or upwards family which would not have a term insurance in place, because these are working families. They understand the importance of term insurance in case it's required, and costs are high, living costs are high. They're nuclear families, and those families do need to be supported if the earning member is not there. By contrast, in India, last year our term insurance was only 0.458%, so less than 0.5% of our life insurance market. It grew for a few years and it's kind of been stagnant. A lot of people who have bought term insurance are the more educated people who understood.
So what you're saying is that out of 100 people buying insurance in India, different kinds of insurance, life insurance plans, not even one is buying term insurance, even though it's considered to be one of the most important parts that one should have in their
absolutely.
In their kitty.
So let me make it even bigger. Out of every 200 people who are buying life insurance in India, not even one is buying the pure life insurance. So it's less than even one. So yes, there is a big need. We were just discussing that should one have repetitions of a program like this where term insurance is really spoken about, because people just need to understand how critical it is, especially for people who've got dependents in their families and are not very, very asset rich.
So let's get into the importance of term insurance and also the costs, because traditionally we have bought insurance which is linked to some sort of a savings plan. So you get something back in, after 20 years or 30 years. That's traditionally how Indians and us, we've been buying insurance. What needs to change now?
Yeah. So, see, first of all, we never really bought insurance. We were always sold insurance by somebody. And term insurance is a product which we require. Nobody's going to come and sell it to us because nobody's going to make a large amount of money in it. And I'll explain why. For a typical 30-year-old person, a 1 crore term cover for the next 20 years will cost less than 10,000 rupees per year, less than 1,000 rupees per month. Now, at that kind of premium, you know how much it costs today to drive somebody's car or come over to your house. Nobody's going to come to your house and spend money and explain this to you to a large degree of detail, because it's not worth it. If it's not worth their time. So the consumer has to put in the time to buy the product. And I don't think the consumer should spend too much time on which product is better or which product. They're all so low cost that just get on with it. It's less than 1,000 rupees a month. And think of all the things we spend 1,000 rupees on. For most people living in Delhi, that would be about the cost of toll to cross over from Noida to Delhi every day. And lots of other tolls would cost that much. And I think especially the importance is very, very high for middle and lower middle class families. Principally because there the family really depends on the income of the earning member. And if the earning member is not there or is disabled or any of those things happen, how exactly is that family likely to continue? I don't understand what plan people have for their families to be able to undertake those costs for the next 20 years, 15 years. If somebody has children who are 3 years and 5 years old, how exactly are they supposed to go through college? Has somebody thought about that? Because if they have not thought about it, they're really not being responsible. And to some extent, they do need to be responsible, and they do need to take on that little bit of, it's not a financial burden, come on, it's like most people in that situation would get a cover for maybe 500 rupees a month to 1,000 rupees a month. So it's really not that big a deal. And
it carries with it all the tax breaks and
of course it's tax free as well. Although on 1,000 rupees in a month, how much tax are you going to save? You're probably going to save 300 rupees taxation or 200 rupees taxation. But yes, it does have all the tax breaks. I think it's a very critical product for people to have. It's really
so how should an individual decide that this is the kind of, or this is the amount of insurance that I need?
See, there are two basic things that one needs to look at. One needs to look at what is the monthly cost that they are likely to undertake on an ongoing basis. What are the liabilities that they have? So do they have any home loans that need to be paid off? If I have a large home loan to be paid off and I'm not there, I don't necessarily need my family who doesn't have an income any longer to be having to pay off that home loan. So ideal would be you take a lump sum amount, like one-time amount for the entire amount of loans that you have, and you take a monthly payout for about 10 to 15 years for your expenses plus a little bit more, because that should allow at least the children to get through the schooling period. And at the same time, that should allow for the individual, the family's, liabilities in terms of house loans, etc., to be paid off. So that is an easy way of looking at it. So assuming somebody's family had an expense of 20,000 rupees a month, and they had home loans of 30 lakh rupees, so the plan they should take is maybe a 40-50 lakh rupee cover, and something which would pay for at least a 15-year period, maybe about 30,000 rupees. That should make their families comfortable. That should leave a little bit of cushion from a support perspective. I think that's a good way of doing it.
What are the different kinds of term insurance plans which are available? Or is that the right question, really?
No, it is the right question, because, see, it's an important product that you are purchasing. It may be low cost, but it's still important from its utility perspective. And one really needs to understand how, in that situation, in that sad situation, how these funds are to be utilized. So there are multiple mechanisms. One could take a plan that pays in one go. But remember, if you take the money in one go, you are very prone to potential non-financially savvy investments of those funds.
So by this you mean that maybe go in for a plan which gives you a staggered payment. Schedule over the years.
If I look at somebody who's got, let's say, a 10-year-old, 5-year-old child, and they know that they've got about 15 years more to go through schooling, then you need to ensure that the family gets that money for the next 15 years. If the individual gets 1 crore rupees and some relative advises the wife or the spouse to invest that money in some property, that property may go up in time in terms of price, but the kids may not get their education. And I think the kids' education may be important to the individual who's taking this plan. So whatever is important to the individual, they have to some extent ensure that those amounts are there. And I think that is precisely where I am really a big fan of the ones that pay out over a period of time rather than pay in one go. I would also hope that over time plans will come out which take care of children's costs as they are going through education, senior education, and the spouse's retirement planning as well can be part of that, because those are practical problems. Everybody doesn't have a government job, and the people who don't will not have those pensions and retirement benefits. So of course people need to think about it. So I think the kind of plans, just to put it clearly, are on one side, what's important is how long are you taking the cover for. Typically you should take it for up to about 65 years of age, although plans are available for up to 75 and even up to 80 years of age. But ideally you should take it to about 65 years of age, because after that the income is not there. So depending on if the person is 30 years, maybe a 35-year plan. If the person is 40 years, maybe a 25-year plan. The amount should, one rule of thumb is about 10 times your income. But the other rule of thumb is your liabilities plus your monthly costs into 100. Those are the two rules you could take. Try to break up your plan into one-time and monthly pay to take care of ongoing costs as well as one-time costs that will be there.
And so most of the companies allow that kind of a...
Many companies allow that. See, every company does not have to allow it, because you are in the market. You are in the market As long as you have more than one company or two companies providing a particular option, that option is available to you. So as an individual, I think you should look out for those options, and all these options are available in the market, and go with the one that suits you best.
Right. So how does one go about buying a term insurance plan? You said at the beginning of the show, a lot of companies are now going to come to you with a term insurance plan. So how does one evaluate which is the best plan? I mean,
just like you buy your airline tickets. So most people buy their airline tickets by going online. A typical airline ticket is about 7,000 rupees, which is what a typical term plan is going to be. So just go online and buy it. It is really that simple, because you will be able to do your own research. See, online as a medium cannot lie to you, because if it lied to you, there are 10 more consumers, actually 1,000 more consumers. So someone like us would have about 800 odd concurrent users at one time. Somebody will notice a fault and inform the authorities. So online will not usually be able to give you wrong information. So get the right information, do your own research, and buy. It's really that simple. You just pay for it and you have the policy. You may have to undergo some medicals because it's an insurance product. So if don't make any false declarations. As long as you make the right declarations, the policy that's available to you, take that policy and go ahead with it. I think it's really that simple. And I would say online is pretty much the only way to buy term insurance.
Well, you touched upon the age factor.
Yes.
Now, does it make sense to buy term insurance early on?
Yes. It certainly helps.
And what about, I mean, should you only buy it when you have dependents, or can you buy it earlier and put your parents on it?
There is no point buying term insurance if you don't have dependents. Because, see, you're not going to get unless, now there is a plan which you do buy without dependents, which is a personal accident or a disability plan. Because if one gets disabled, they will be alive and they will need to use those funds. But we're parking that aside. When we're talking about term insurance per se, one does not need to buy it when one does not have dependents, because the funds are going to go to the dependents. If there are no dependents, who will these funds go to? The second reason for buying it early, as soon as you have dependents, and not delaying it, is because the cost of the term plan is lowest when you are younger. So if you are taking a term plan when you are 50, for up to 1 year.
Let me ask you a very basic question. And that cost is a constant. So if you buy it at 6,500,
it stays the same throughout
till you're 75 or 65.
Exactly. So if you take a plan when you are 30 years old and it goes on till you are 75, so you bought a 45-year plan, and let's say it costs you 8,000 rupees a year.
So it's not like health insurance, which will keep going up.
It is guaranteed to cost you 8,000 rupees. The price of that product cannot go up as far as you are concerned. It is guaranteed to cost you 8,000. So the company has undertaken to underwrite your life risk all the way till you are 75 at the same 8,000 rupees per year. You have the ability to cancel that contract voluntarily. So you can, when you're 40 years old, say, hey, I don't really want this any longer, and stop paying. And there's nothing more required in a term plan than just stop paying and the contract is cancelled. However, the company does not have the ability to cancel your contract, or to say that you are not allowed to pay any longer, or that you have to pay more. So it's very important to get in early. Another point which I would add why I think people should get onto the term insurance bandwagon right now is costs have declined very rapidly for the term insurance.
Hey, Yashish, we're talking about term insurance plans, and you were talking about the right time to buy, and you're saying that term insurance should be bought now because the conditions in the market are apt for it.
Basically what's happened is, since 2009, or rather 2008, the prices of term insurance have been dropping. They dropped by about 60% in the first 3-4 years of this time frame, and they have dropped by another 10% in the last 2 years. So what one is noticing is that the drop has slowed down. It is unlikely that the drop in prices will continue. But at the same time, about 4-5 years have passed, and some claims data is coming in, and the companies are learning a lot more, which is a good thing, which is exactly what should be happening. But I fear that in the future, it might get stricter, in the sense, only certain conditions. Today, up to 50 lakh rupees cover, up to 50 years of age, up to 55 years of age sometimes. There are no medicals as long as you're making your right declarations. Some of these conditionalities may not be available forever. So I think consumers should take advantage of this situation and buy early. We have seen lots of products go out of circulation. I'm not expecting, in my view, I don't think prices will go down much further. what you may actually see is companies becoming more selective in the risk they are taking. And certain types of risks can be covered today may or may not be covered into the future. So I think from that perspective, it's a good time to buy the product while it's available than to later lament that I could not get it while the prices were right.
Right, Yashish, final question before we take viewers' questions that they've written in. What about declarations? You touched upon that. Yes. How important are those? I mean, if you're a smoker, because all these have an effect on whether you'll get the term insurance policy, what the cost will be. Tell us a little bit about making the right declarations.
So, I have met two kinds of consumers. One who think that the declaration is not important and somehow it will not be checked. The declaration will be checked. It's a large amount of the company is paying, they will investigate. At least assume that. Do not assume that it won't happen. And clearly make the right declarations. I have met one or two individuals who were in such extreme situations that they said they really don't care. They're going to make the wrong declaration anyway because the cost is so low. I think it's the wrong attitude. See, we get into situations, we've gotten into a situation. I don't think it's right to put that burden on the insurance company. So both from a moral perspective and from a commercial perspective.
And your dependents, what if it's turned down when you actually need it?
In those cases, those people are like, I'm going to die anyway in the next 3 years. I know it. So what's the cost? If I can get 1 crore of rupees by spending 30,000 rupees, what's the cost? And okay, 99% will get turned down, but there's a 1% chance I might get paid. So commercially, I understand where they're coming from commercially, but have a moral. What wrong has the company done? Why should it be taking on the individual's burden? It's not right. So both from a moral perspective and from a commercial perspective, please do not make the wrong declarations. You will not get the claim if you make the wrong declarations, and you will get the claim if you make the right declarations. So please make sure your declarations are very correct, and so that nobody suffers in the process, neither your dependents and nor the insurance company. That is also, finally, it's a commercial entity, it has to make money.
Right. Now the consumer questions. We've got Akash Sharma from Delhi, and he asks, how does one know which insurance company is stable, and will they be around to support us in the long term? And of course, he's talking about risk cover, given that most insurance companies are not more than 15 years old. This is a concern that we've repeatedly got from a lot of people. So
besides LIC, no company is more than 11 years old, because no company could have started before 2003 by definition, because that is when the insurance industry was privatized. So clearly all companies are relatively new in the country. However, see, I will just explain how these products are created. The insurance company does not carry the entire payout risk. So if you take a 1 crore cover, mostly what happens is the insurance company in most cases will carry the risk of up to 5 lakhs or so. The rest of it is actually paid by a reinsurer, because the insurance company doesn't have the bandwidth to kind of take that larger risk. So the reinsurers are the same. So these are Hanover Re, Swiss Re, Munich Re, GIC, our own GIC. Now these companies are at the back end of all the companies. So whether you are going to an HDFC or a Reliance or a Tata or a Aegon or a Aviva, at the back end the reinsurer is pretty much the same. So, ideally you don't need to bother too much about whether a company is more stable or not stable. You have IRDA, you have the law, you have lots of things to take care of that. Companies will not pay people because they don't have funds. Companies may not pay people if people have made false declarations. So you will have companies that are more aggressive in their investigations, and there will be companies who will be more relaxed in your investigations. But if you are making the right declarations, you don't need to worry about that. The person who needs to worry about that is the person who's making the wrong declarations, and you should not be that person. Nobody's advising you to be that person. Yes, if you are one of those people who is making a wrong declaration in a purposeful manner, then of course select a company that is less selective in terms of their investigation process. If you know any such company, please follow them. But though that company also will not make profits for very long if it continues to be that way.
Right. We've got Naman Singh from Indore, and he asks, is there any age limit for term insurance covers for individuals? Is it the same or for both the genders?
Yes, there are age limits for both entry and exit. So, till what age can you buy a term plan, and till what age can you be covered by the term plan? And these differ by company. Usually, you are allowed to enter a term plan for some company or the other. So you've asked me overall till about the age of 65, which is a pretty late stage, if you would agree. And one can have a cover at maximum till about 80. Of course, it depends on how much cover you want. And I don't think 65 to 80 is the right age to buy the cover. I've already said I don't believe you should have the term cover from a logical perspective beyond 65. Beyond that, you should have pension planning for your spouse, not term cover for yourselves, because term is not a way to make money. It's a way to, cover the loss of income that one would face if the income earner were not there.
Right, Yashish, thanks a lot with that. Very good advice. That's all that we have on this show. But do write to us at ask@policybazaar.com. Tweet us at Twitter @policybazaar_in. And we'll see you next time. Goodbye.